All right. Good evening. Can you hear me? Okay. Duplicate my screen real quick. So we're watching use the yin here, and basically I was buying through this, um, even when market at night is going down. So what gave me the confidence to do that is this. Okay. Let's gonna remove everything real quick and just help y'all see the market from both sides. Okay. Um, so on the hourly here, we see clearly it's been a downtrend, right? But is it? Because on a daily, it's been up. So which one is it? Is it uptrend or is it downtrend? You know, so trend doesn't really matter because you can say the trend is however you want to see it. Okay, it's conflicting. So we're at the daily bounce as far as the trend line, but it passed it big time right there a few days ago. Okay, so which one is it, right? Is it really up on the daily or is it down on the hourly, right? Because on the hourly it is down, but on the daily it's up. So with trend, it can be very confusing. Okay, but you got to really see both sides of the market because in a trend, if you think about it, a trend is not straight up. A trend is up, down, up, down, up, down. So that's the wave right now is the down on a daily up. Does that make sense? Okay. So you just need to know the context of what you're at. So if you are a swing trader and you're trading daily, over weeks, then you would be buying. But if you're a scalper and you're trading for a couple of hours, then you would be selling. So there's really no conflict if you think about it that way. Is this making sense? Any questions on that so far? Okay. So the way I have learned recently is to use a fib because people use fibs, right? So this is the daily and it's too far away. Okay, it's too far away. So because we're scalpers, we're trading in the hour. So you go down to H1, let's narrow it. The last move for the major move is this one right here. So the last big major move is the down. Okay, so we're up, but we have not surpassed it, which means it could still very much be a downtrend, right? It bounced here, keeping with this downtrend, which means where is it headed? 62, because this was a 78 as far as this move right here. Does that make sense? Okay, so 62, you can see there was also a bounce point here. It went down to 50, bounced up, went down to 62, dropped. Came up again, hit 62, bounced down, came up past it, and probably coming back to retest it. So that's what I see on the day on the hourly. which is that USD yen wants to come to this level. Any questions on that? So now let's go down to the 15-minute. Okay, I was buying throughout this wave right here, but then I'm out. Why? Because let's pivot. Okay, so on the 15, we're gonna fib the opposing move, which was this last drop. Okay, so that pullback, if you look, I'm gonna zoom in. It only came up to 23. From pivot to pivot, it came up to 23, and it could not break the 15. Okay, yeah, I'll explain it again, because if you are in sell bias, right, thinking, okay, the hourly is down, you need to know where to enter, because if you started selling here, guess what? You could have to go all the way to 50, all the way to right here, 50 here, or 62, or even 78 before it drops. Okay? Because the market moved from here to here, it can very much counter and go all the way back. Does that make sense? So as far as your price cycle, if you measure this 60 pips, the risk needs to be twice that, and somewhere here, even 100% in case you need to get out. Is this making sense? So the point is that if you are not sizing properly for your risk, you're going to get in trouble. Because if you're sizing your risk for this, what happens if it goes to 50? Yeah, you could buy, basically get out yourselves and buy for the short term, right? So the point is that you just simply need to know where the market will be entering trades. So here on the hourly, we're down, right? Which means, okay, if I'm sell bias, I need to know where my buys are going to come into the market. Okay, so on the 15, I was measuring this move, and that means, okay, well, let's measure this last one right here. So let's switch to, dang it, lost my, flipped my charts. I like to see the 15 on the bottom left and 5 up here. Okay, so if I'm measuring this move, in this last up move, where are we at? You see that it came all the way down, hit the support, and this is 78. It bounced at 78. So that means that if I was selling right here, I could have secured my profits right there for 78 because it's a bounce point. And then now that it's come back 62, it's probably coming all the way down to 100. Is this making sense? So you just need to know where your bounce points are so that you can manage your entries. So that's on the upside because I'm measuring the last up move. And then now on the 15 here, I'm measuring the last down move, which means if I was bouncing, well, I can start selling on 23, I sell on 38, I sell on the 50, sell again 62, and again 78, right? With up here being I'll add to get out of my cells. Okay, now because it's already reached 23, which is this one, this is the 50-50. I don't want to sell right there. Because if it fails to sell, well, guess what? It's going up as a W. Is this making sense? If I was selling right here, I would secure right here. Okay, why? Because if it's not coming to here, then we're not going to drop because this was 78. When it stops at 78, it tends to go up. Okay, it didn't break 62, but it has to do this first. So if it goes up, like it went down 78, hit 62, went down 50%, then it'll go up. But if it goes down, hits it, and then comes down like this, more likely to continue. Is this making sense? So this is like your 50 of the 50s. So if I'm selling, I don't want to be selling right here because this is bad PTP. But do I want to sell right here? Not on the second. This was the first, not on the second. Because on the second, it's likely to continue to here. Does that make sense? So the first time I was selling here for the pullback, okay, so I got out of my buys right here earlier on a different account. But if this breaks down, I could sell to here. It's a risky trade, but it's a risk. It's a small risk for bigger reward because my risk would be, well, I'm only going to risk 17 pips or 32 pips. It's a 1-2. Is this making sense? So you have to know where you're going to cut. Okay, because that's my plan A. But if I sell right here and it only stops right here, well, I have enough to secure because that's 13 pips. This right here is 13 pips, which means I have enough to secure, 5, 6, 8, 10 pips. Even if it means I enter bad PTP right here, because I can get at least 2 pips. Is that clear? Okay, so you could wait your timing and saying, well, if it bounces here, comes up to here, bounces here, then that's your W. Or it could go 3 times as your M and then drop, and it sometimes might do this. And so if you want to be in sells, you could wait, all right? Or you could simply realize that now this is the range. This is the range. If the market is going to turn, it's going to range first before it turns up. Okay. So it's just realizing where the fib levels are, because if this is return, it means it fails to even reach 62 and we're going up for the 100. So if you're still in sells, you're going to have a hard time then, because now the market is drifting up for 100% retracement and it's likely to continue all the way up because there's a nighttime drift. Okay, so here's the support. And we're going to see, is it going to break it or come back up? Okay, so if you still want to sell, you can do it still by just playing this fib right here. So if you had 1 trade right here, 1 right here, 2 right here, maybe 2 here, then you're going to have to get heavier. You probably need 5 right here, and you probably need like 20 up here. Okay, which is, if it comes to 100%, the likelihood is it comes at 78%. You could possibly get to 62 again for the breakout. Okay. But the highest probability is right here. Why? Because if you draw the fib, I'm going to draw on the 1 here. It comes all the way up to the top. Draw backwards. And this is the apex. Look where 23 is. This right here is 23. Is this making sense? Which means if you want to get out, like you're losing really, really bad, you have to size and add heavy to get out here and take a smaller loss or break even or something, even a small profit. Is this making sense? But it's just knowing where the market tends to bounce. So market tends to bounce at fib levels. So if you size this right now, for this move right here, we are right at 38. You see that? We're right at 23. So the market tends to do this. If it's going to come up to 50 again, which it did, it touched 50, right? Came back 23, having a hard time because it's also support right here. Bouncing a little bit. Okay, so if I think this is still going to go down, I could put one cell right here and be light. So I'm going to add my panel. And now this is not as bad of a PTP because it's on the pullback. You see that? It pulled back. It went to the, it's still hovering the 23, pulled back 50% of this move right here. And that's where I add it. Okay, the next time I add will be right here. Yeah, like so as far as position size, now keep in mind that these are big positions, big price cycles. So I use my indicator here for pivots. And you can see with USD yen, it's pretty big. Market tends to move longer. Like you can see on the 5 here, it's the average is 36. And the last move, being this move, was 72. Okay, and then on the hour, 100 pips is very easy. Okay, we're right at that range. The average right here is the same. 175, we're 105. Okay, on the 5-minute though, the average right now is 20. Okay, so if the average price cycle is 10 and you're on a 50K account, well, based on how we size things, you could do 0.5. I just realized this is a 10K account, so this is way too heavy. So that's bad. Okay. I was switching between different size accounts and I forgot to resize. Okay. So if this is 10 pips for the price cycle, 0.5 is okay. Now, if you're adding less trades per level or per zone, you can size it a little bit bigger, okay? Like one lot per trade kind of thing. But I tend to add more trades And the way I add, I don't add like 1, 2, 3. Okay. I tend to be more like this, more exponential. Like literally, like I'll add 1, 1, 2, 2, 10, 20. And so it's not even martingale. Okay, it's not like doubling each letter. Okay, so I would, if it's 20 pips like this, I would recommend you trade 0.25 on a 50K. And the reason for that is that if you are trading even smaller size, like when I was trading 0.05s, well, to even make any money, you have to add more trades, which means the more trades you add, the more your hyperactivity is going to go up. Because most trade firms, prop firms, have a limit of 200 per day. Okay. So it's better if you take less trades and just size it properly. So if you take less than 50 trades a day or less than 150, then you usually should be good. Okay. If you're adding on, let's say 20 trades at a time and you move your stop loss twice, it's going to count as 80 messages because it's 4 messages per move. Okay. So if you have 20 trades on and you move your stop loss, that's 4 messages. That's 80. And then you move it twice, that's 160. Okay. So prop firms have a limit of 2,000 messages that hit the server. So even if you don't have the trades, you can still get hyperactivity for the messages, being that you move your stop losses or take profits too often. And every time you close, it's also 4. Okay. So every time you put on a trade, it's 4 messages. Is this making sense? So in this account, because I'm a 10K account, I would reduce it to 0.1 and 0.05, being that this is 20 lots or 20 pips price cycle. So do this 1.05 and then I'll do this 1.1. Want to. Okay, so you can see here, I have profitable trade. And if this is going to continue down, then I'm going to hold. And I'm going to now look to build, being that this will probably come down to right here, 62. All right, any questions so far? Anything that didn't make sense? Well, hourly is down. And so it followed this trend line here. So most likely, if it's going to continue down, it's going to hit 62 before it bounces. Okay. But if you size it and enter your trades properly at the fib levels, you usually can survive, a 1.5, maybe a -2% drawdown. Okay. Now I sold right here, which is not the best place to sell. If I waited to here, the 23, it's a better place to sell because that's the bounce, right? And that's exactly what happened. It bounced right here. So depending on how you size things, if I size it from here to here, this is the 23. But if I size it from here to here, this was the 38 or 50. Let's see. So when there's correlations with Fibonacci levels like that, because this was the 23 and this is the 50, that's where market kind of goes. And so there was nothing here. So if you were adding trades here, all this is junk area to add. I add light now. I only add like one, but I'll add things like one right here, two, because it's a 0.1. Okay. And so here you can see it's kind of failing the middle. I'm not going to add again until I hit right here, because everything in between right here are junk ads. It's not going to help you, and you're going to get too heavy too soon because there's no bounce. It's going to just drift in between. Okay. So if you wait, like right here, 50, to add, well, where's your next level? You see here the 23, the next level is your 38, which is over here, these pivots. So if you measure it, it's right there, 78. Does that make sense? So your next ad, as far as a good level, is right here, 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 because why? That's 62. This is 50, and it's 78 right here, which is also this resistance right here. Now, if you fib it backwards, you'll notice, so I'm gonna draw the horizontal lines, and then the major ones to add. And clear my drawings right here. As far as I'll have to restart real quick. All right, so you see the sell is going against me, and it's okay. I'm going to add, I see the W as far as the range. It's breaking that channel right now. I'm going to be patient. Adding here that the 38 is not that great. It's a 23, which is okay. So I could add. It's just that I started out a little too heavy. Oh, come on. So adding right here is actually a good add. Okay, because it's a 23 on the 15 and it's the 38 on the 1. Okay, the next would be the 50 on the 1, which is still hovering the 23. Okay, so that is like your zone. Does that make sense? This is like level 1. You have 2 or 3 trades per layer, depending on how you like to add. Okay, but I do see the W, potential for a W to break up, which means it's going to go to the 50 next on the reverse side. Okay, so if you draw this on the reverse side, here's a pivot. This is the 50, but guess what? Here's the pivot. Here's the 78. Do you see the correlations? It just, if when you fib the different time zones, it correlates like just almost like clockwork. You know, that the seconds follow within the minute and the minute follows within, the 15 and stuff, and the hour, and the hours within the days. It's clockwork. Okay. Is this making sense? Okay. So what I would have you guys look at is, where do you make your money? You only need one move. You only need one move, okay, to make your money. So you either will trade the current or you're going to trade the next, which means in the current move, you're in a drawdown and you will make your money in the next, in the pullback. Or you're going to make your money in the current and exit and stay out in the next. That means when it turns, you're out. You're out. Don't go adding to your position. Okay? Because when you keep adding in your position right here, what happens? You enter the drawdown and then you give up all of your money. Does that make sense? So you need to learn to recognize the turns. And so the whole point of adding these fibs and opposing sides is to realize that market moves between levels. If it bounces here, it's going to come back to here. If it breaks this, it's going to come to here. If it bounces here, it's going to come back to this level. And then it could continue to the zero. Okay, which means it will probably continue all the way to 62 before it bounces again. Okay, so if you're making your money, it doesn't matter which direction you're in, because technical analysis can only give you about 10% of the time. So whether you're in buys or you're in sells, it doesn't matter. It only matters if you size it properly for the proper place. So if I'm selling right here, I could have made my money in sells right there. That would have been the current wave. Or I could have exited right here and started buying and making my money here, which is the next wave. Because whenever there's a current wave, there's always an opposing next wave. So that's the whole point of counter trend trading. You counter the current move for the next move. And the next move typically is sizable enough that you can make your money. Whether you size it, like, let's say you make, you have one lot here and wrote it down all the way, or you wrote here 2 lots, it's still the same. But you need to know how to size for profit. So if you pick the wrong direction, you have to size heavier in this direction to make your money. But if you pick the correct direction, then you can size with less risk. Is this making sense? Okay, but if you're bus route here, you're not going to make any money. So you got to know how or when and where to add, which is, hey, when this was failing this level, that was the time to add right there, because then this was the next level. It doesn't really matter. It just pick, like I do pivot to pivot because it's much easier to teach. David does, like, from break to body and stuff like that. And then based on the last break, it could be complicated. Because, do you draw the break from here or from, in this case, they're all aligned because it was all here at the same level. But it's all this, it doesn't really matter in my opinion. Come on, why is it not selecting? Because like here in the 1 minute, let's say I drew the break from here. Well, look, we're at the 50% of this right here, which is a 38. It still correlates to the same level. The same level is right here. See, whether this is a 38 or 50, it doesn't matter. It's still the same action point. And in this thing too, right here, see here the 50 right there, from pivot to pivot. So I drew it from 50 and 38, and then I drew it from the break. Well, look at that, 62, 50, 38. It's the same fib levels as far as action points. So it doesn't really matter where you draw it. The idea is to get that area that the market is going to take some action. It's going to move in a certain direction. So right now, this is the range. This is what I was talking about. It typically drops and then it ranges, which means the likelihood from what I've seen is it pulls back somewhere here before it drops. So if you're in buys right now, you will have your money in the current move. But if you're in sells, it's going to be in the next move, which is I'm going to build for my overnight next move. And that's why I'm still in sells. But the point is to size it, saying where would it likely turn and how bad can it go? 100%, 120%. And I need to be able to withstand this move, 120%. Because when it does do that, when the market does this craziness like that, drew it wrong here. Look, 120. This one doesn't have 120, but the point is that this right here is the 120. This is 125, which is a 78 on a higher time frame. I hope I'm not confusing you with all these opposing fibs. But that I'm trying to show you, it doesn't matter how you draw the fibs, it will correlate to the same action points, which means those are the areas you want to wait for to add trades. And see how it's going up right now? And it's okay. What it has helped me do is that when I was practicing in simulator, it calmed me down and saying, well, no, I'm not missing out. Hey, I'm not going to add too heavy. I'm just going to slowly add one at a time, wait for my confirmation, and then load up. Because the moment it turns, you can get in, get out fast. And it doesn't matter whatever trades you put on earlier, you give those back to the market. Okay, so it's market's moving slow right now. So what I'll do, I'm switch now to simulator and show you how I was practicing this. Okay, so here I have different sizes for drawdown and profit. So like this right here is a quarter. This is 50, so 0.5 I mean, and there's 1%, 1.5. This right here is 3, and then black is for, hey, you know, your account's dead. Risk out 5%. So in this case, I risked 1% to make 2%. So actually more than that. Oops. What there? Okay, so in this case, this is Euro USD. You see, I have fibbed it The first thing I did was here, I fit this move to kind of see how far the market moved. And when you draw it up here, it moved the same amount. Okay, which means if it's going to continue up and I'm going to buy, that means I have to survive to right here, 62, where it's going to bounce, maybe to 78. And then if it goes against me really bad, to right here. You see that? Those action points line up with the fib levels. So that means if it blows through all of this, didn't bounce right here, it's gonna bounce right here. Because at that point, it's oversold. And I have to survive 127. So if I size things properly to 127, and this is my 1.5 or 2 or 3%, then I'm gonna be safe. At the very worst, I take a loss, but not a max out risk out. Does that make sense? And usually the market will turn and bounce way before then. But I have sized it to survive such a big move like news. Okay. So that's the whole point. Okay. And so here, I'm going to play it. Let's say if I think this is going to go up now, right? It's going to go all the way up. And look at this. If it goes to 127, right? Just measure this, move right here. You could actually go to 162. Okay. But the point is that it should bounce enough, like right there. And that's all I need. So I would lose all of these trades and I would make the money right there. That's the point. That it doesn't matter if you caught the wrong wave. Okay, so let's say you think this is going to go down, like, oh, I see some kind of technical analysis that you think it's going to be going down. So now I'm going to sell right here, even though right now this is a W, it's going to go up, right? I'm going to purposely sell to show you how to survive the drawdown, being on the wrong side of the market. Now this is a 50K account. I'm going to sell right here at the 23. Okay, I add one more right there at the 23 on the 15. And I'm going to wait. This is an expansion. And look at that. See net profit right there. See that? Net profit, which means I could get out. In this case, I'm not going to get out. I'm going to let it draw down. Okay? Then you have to be light enough. So if you put on a few trades, see, look, I'm net profitable. See that? Just with 2 trades. And I was like, well, you know what? You can easily make a quarter kind of thing. But I'm going to let it go against me because that's what y'all tend to do. You don't take your profits. Okay. And what happens if it goes in your favor? Well, you build at that point because then it means it's not bouncing at 62, it's going down to 78. Which means if it breaks this, well, I can add one more layer. But if it goes against me, I'm okay with it. I'm gonna speed this up. Thinking, okay, well, this is nighttime drift, it's probably gonna go down. Okay, I was wrong, it goes up. You see how it's ranging right here? between 0 and 23. Market comes down, ranges, typically comes up. You see, I would predict it wants to go up to the 50 right here, 62 actually. So here I'm profitable. Guess what? I could secure it right here. I could very much secure it right there. Okay. And ensure my profits. Does it make sense? If it continues down. But if it goes against me, I add back. And it doesn't matter. This is taking forever. And there you go. I'm out. See, so now as it goes up again, well, look, it's at 23. I add one trade. And this is where David's like, get comfortable letting the market go against you. Why? Because the whole point is that if you caught the current wave and you're light, you made little money. But if you're getting heavier for the next wave, you should make a lot of money. So there it is. So there's the 38. I'm going to add one more, thinking, okay, this could break out. Didn't, it's like it's not turning, not retesting, right? It's still doing an Nazari wave up. We'll add at the 50. Okay, I think it's going to turn. So I now add a little bit heavier. And there you go. See, I'm net profitable. So I could get out right here, secure it. Right? I'm going to go equal, 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 boom. And there you go. You see that? And I can secure it. And then as it goes deeper, do a right wave exit. Boom. And I'm out. And see how matter there goes against me. Okay, so let's say I still think it's going to go up. So I'm going to purposely sell. So I sell again, 23. I'm going to wait for 38. And look at that. It's still going in my favor. Well, look at how it's ranging. So I got out like near max profit. But the point is I haven't sized anything and it hasn't gone against me to where I'm struggling, right? So there's the 38 again. I'm going to add one more. Okay. And now if this is a Nazari wave, right, which means it breaks out, then this will become the new 50, like this. And you'll see that it aligns. You see that? Double this is this one, which is also the same thing as 38 to what? 78. Is this making sense? The fib levels line up with your price cycles. Okay, so here I could say, well, because it's going against me, I'm going to wait for the 50. And here it is. It's almost there. By the 50, I mean this one right here. It's not there yet. And there it is. It's right there. So I'm going to add 2 trades, basically 1.5. But not the time to get heavy yet. I haven't seen the turn. Now this is getting weaker. It's getting weaker. And it's kind of turning. So it's like, okay, maybe I add one more. Which it can still go against me. Perfectly fine. And this is what it was really hard for me, which was let the trades go against you. And I was like, what? Right? But if you size your positions properly, then you will enter at the best times. And this right here looks like it. So I'm going to add to my trades. It looks like it's turning. Because look, it's not passing 38. So then guess what? When it comes down, look at this. Net profitable. Net profitable. You see that? If I just take my trade, if I just exit right there when it was here, I was net profitable. But it's too fast. And it's like, okay, it doesn't matter. Let it go against me. I'll add the next one. So you see my drawdown, I'm not making that much money yet because the market hasn't given me that opportunity yet. Which is, if I really think it's going to go in sells, then I'm going to secure my trade. See? So right now, again, I could get out, break even. See that? Break even. And if this is truly the M, we're going here. And these will be profitable trades. Yeah, maybe I give this one back. But the point is, if this breaks, it should come to this action point. So this one, I should give very little back if it goes down, right? Being that it came up, went down, came up 50% kind of thing, drops. Because look where we're at. It's at the 38 of this. It's at the 50. Okay, it breaks up. Well, look at this. The next is 23 here, which is what? 50 here. So no, since it passed 50, well, we add heavier here. I'm gonna add one lot. Why? Because I have to. And look, my sizing right here, it's getting bigger. Drawdown. But I'm not even 1%. Right now, I'm only 0.5 in drawdown. Okay, and I think this is a turn. So I missed my chance to add heavier right here. So now is not the time to add because this is a bounce point. Unless this is the apex and it comes to here. But I can take my profits here, secure it, so that I don't lose. It's not that I prefer counter trend. I practice what I'm weak at. Does it make sense? And this now looks like the apex, so I'm going to add heavier. So any kind of pullback, I'm going to add some for drop to here. And this is where I make my money. One move. All I need is one move. Because this looks like the apex. So you see how heavier I'm much getting right here? Like I add here, like, 1, 2 kind of thing. So if you look, this is like 1, this is 1, 2, here 2, so like 3, 4, 5, 6, 7, 8, 9, 10, 11, and then look at how many one lots I'd add. 1, 2, 3, 4. So it's like 4 times that. Add back the one lots. If this is the apex, this is a turn. But it's having the confidence to add. And look, once it comes down and touches this action point right here, Why? Because that's your 23. We're right hovering the 23. Okay, but if you look at the profit chart, the equity chart, look how easy it is for me to get 0.5. I risk 0.5 to make 0.5. I'm hovering 1% right now. It's a 1 to 2 right now. And there it is. Boom. See, the moment it hit that, which should come down a little bit again to retest, it didn't hit the action point. And I could just get out right here. See, because I basically hit goal. See, if 1% was my goal, I already got it. Or I could just keep building. Well, look, even if it was against me kind of thing, I would just get out a smaller loss because I'm profitable. Okay. And it usually retests is the thing. Now this one is not good because it's like, well, look, came to 50, came down to 23. It's likely to bounce because I'm heavier. I missed my shot to get out, which is right here. Okay. And so it's like, well, you kind of have to start buying or hedging out of this. Okay. But if you, this is super fast too, is a simulator. The point is that if I wanted to make 1%, I already got it right here. And I didn't risk but 0.5. So I risked about 0.5 here and I made 1% here. And so I really wanted to get out here, but it's just in a simulator when I'm going super fast, it's hard to exit sometimes. Okay. So if it was a real live, like slower, then you could secure for goal. Is you could go back right here and say, like right there, saying, well, I'm at my goal. When it went like right here, it wicked, it was too fast, right? So then it's like, well, you could right here secure a goal and say, well, I am going to secure my trade right here. And it's more than 0.25. And look, right there, 1%. It just touched 1%. And you can say, well, I hit my goal. I'm going to exit all. And bam, it's like, well, I'm a little bit below my goal right here. Does that make sense? The point is, it doesn't matter if you're on the wrong side of the market. If you know when to load, when and where to load, then you can make your money in either direction. If you're loading with the wave, then you're less lots. But if you're loading against the wave, the next wave, you're going to be heavier because you're fading, you're building that position. Okay, so when I got more comfortable with building the position, I got better at managing my risk. Okay, but you still got to protect your profits and secure them. Because if you don't secure them, then like right here, if I was in sales, I profited, I didn't secure them, it would be now a drawdown. Does that make sense? If it had gone back against me, I would have hedged, and because I couldn't afford, because I had like 10 lots. I had like 10 lots on. Okay. With a 10 lot, one little swing kills your profit. And you saw that earlier. This small swing right here took it from the top right here all the way back to break even. And then one next little swing took it like right, this little swing right here took the profits down to here, and then the next little boom right there took it down to here. So the heavier you are, the more obligated you are to get out. But the point is that you can make your money in any direction. It doesn't matter if you're wrong. That's why technical analysis is only 10%. The other, 89% is your psychology of knowing where and when to add, which is don't add early. Just add one at the, if you're adding at the fib levels like this, it's a great place to discipline yourself for ads, because this right here reached 50 and it wicked. This was the 50, which meant it came back down, came back, failed this 50. That was it. That was when I added heavy. This was confirmation. So I was adding heavy here and here and here, and then bam. So all I needed was this one move, 18 pips. I use one because we're scalpers. Okay, so that's why when I was trading earlier today, I was in buys. I caught this thing. Well, I think this is the it. Like, hey, it's the consolidation for the break, the turn. So I was buying here. Oh crap, it's against me, But here, secure this one. But here didn't secure it because it wasn't enough. And thinking it was going to turn and kind of did this thing. So I held this time, and then I bought here and I got out right here. So in the profit right here, I made a 1/4% on a different account. Actually, I added here and I made 50.5, even though I was against the market. And so now that I'm out of those buys, it's like, well, I want to be sells for the next move right here, because it's not breaking this. Even though it's a W, it's not breaking the 62. So adding here is not a good add, because that's your end of your price cycle. You could still go like this. Does it make sense? Let the market tell you where it's going to add, and it hasn't turned. This is just the range that you don't know yet. It's still under this 15 right here as far as Heiken Nashi, which is a good sign for sells. Okay. Because overall, the higher time frame says it wants to come to here. It wants to come to here. Does that make sense? So the likelihood for me saying, well, you know what? I have at least here 20 pips, and that's all I need. I just need to wait for my opportunity to load. And now is not it, because it could still turn. 15 is still up. It's right at this trend line. We don't know yet if it's going to break. So let the market tell you when it's turning. Whether it's the current move or the next move, just be aware of where the buyers and sellers are entering the market, so that you can size the risk. Because if I think sells is going to be it, well, look, it can come to 50. It could break this a little bit. It's come to this level. It can even come all the way to here, and it will still be in sells. Okay. Now, if it comes to here, I got to get out of my sells. Does that make sense? Because at that point, it's breaking a higher time frame channel. If it comes all the way to here, I got to get out of my sells. So I load right here for one move. And so all these cells on here, I give back to the market. I lost on them, peel them off or whatever, pick and pop. But the point is, I make one move, one move, one move. That's where I make my money, because that's how market typically happens. If it came down like this, range, drops, comes back up, ranges. So right here, see how there's a range right there? If it comes all the way to here, the range, it's going to range again. And you make your own money in that one move. All right, any takeaways from tonight's session? Okay. Now they're quiet, so let's do some more simulated, right? It's like, well, we don't know. This is the 50 of the 50, right? It's staying in this range. So that's where technical analysis doesn't really help you. The market does what it wants to do. It could very much say it came down, came up, came down, failed, going up. Okay. So if I was in this situation, I would be buying. In this case, I'm going to purposely sell, saying, well, let's let it go against me. How I'm going to deal with the drawdown. Okay, so this is the 50. So we're going to sell right here. It's 50 of this move right here, which is also a fib level, 38. We'll let it go against me. Well, clear it all here. If this is the breakout, we size it like here to here. Oh, I think I drew it backwards. You see how I added at a fib level at 38? The 38 right here was also half of this move. You see this? Is that making sense? And look at that. Even though I'm trying to get it to go against me, it actually went in my favor. And this being 6 pips, I could easily secure for profit. And right there, boom, secured. So it's like, well, I wanted to go against me, right? Saying David's words. It's like, well, gosh, I never thought I would say those words, honestly. And there I'm out. Well, I don't add again right here because it just took me out. So I'm going to wait for it. If it comes to the 50, I'll add again. So I'm going to speed it up because oops, too far, too fast. So there it is, the 50. I think what I'm going to do is just trying to say I was going to add right here as far as the 50 in just one trade, right? And then wait for it. And you see it goes in my favor, then you can secure it. And then with this one, you can secure it. This is I'm securing for profit. I'm not securing for breathing room because I still think this is a W going up kind of thing. So you can make your money in either direction. It doesn't matter. It's all about knowing when and where to load. Okay, and then now that it broke down, I can secure this tighter, a little bit more profit. This is already 10 pips. And it's like, come on, really? I thought the market would go up because on a higher time frame, it definitely looked like it's going to keep going up. I don't know that it's going to go down. I was trying to practice the drawdown, but it keeps going in my favor. So there you go. So I'm out, being that's the end of the price cycle, and then I'm going to add them back again since it seems to keep going down. Okay, so whether you're in buys or you're in sell, it doesn't matter. The only thing that matters, like David says, it's good PTP and position sizing. Okay, so I learned to add much lighter. Like David, he'll add 4 to 6 per layer kind of thing. I don't really add that now. It's kind of hard though, because in simulator it's much faster. In real life, it's much slower. So that is one thing I am working to transition. Like earlier today in a different account, I got super heavy fast, and I was like, whoa, what the heck? I got to minus 2% drawdown really quick, and there's like, dang, it takes me longer in simulator to reach that. Well, because I was spreading out my ads, because if I added here in simulator, which is bad PTP by the way, then I would add here, and then I would add here, and maybe go ahead here and here, and then take profit there. But this right here is an hour span. Okay, and so this less trades, because if you count it, 1, 2, 3, 4, 5 here. So maybe in this set I have 20. Okay, but in real life I was adding like 1, 2, 3, 4, 5, 6 kind of thing. So that's the only drawdown to a faster simulator is in real life, the time lapse. You have to slow yourself down. The very slowest right here is 4x already. So I am doing right now a 20x. It's 4, 8, 10, 12, 14x, whatever. And I'm actually going to speed it up. Okay, so this looks like the M, so I'm going to add here because now there's a build. Why? Because it came to here several times and is dropping. Okay, so right now, 100%. I'm gonna wait for the slight bounce, maybe right there at, and this is a build right here. It is support, but where is it? 62. Because the second time it hit, I think it's gonna come to 78. That's why I'm adding right here. Because I'm thinking it's gonna come to here. And it is doing it, so I'm gonna add some more. This is a build. I didn't know in advance this was gonna drop, okay? I was just trying to pick. I honestly thought it was going to go up, and so I was trying to pick a drawdown. But in this case, I'm showing you a build where you build in your favor that you caught a ride wave. So here, you caught the current wave. You need to maximize it, which is where is it going to stop? It's either going to stop here, 78, or come all the way to 100, all the way to 127. Those are the only 3 possibilities. Does that make sense? Right now, we're hovering 78, which means it should come to here. And you could secure, you don't have to add right here. But I'm thinking it's going to come down more. So I'm going to add. I'm going to actually add heavy. So I'm going to build. I'm actually going to build a heavier position, even though this is the end of the price cycle. It has a slight turning right here. It might bounce to here and then come up, like bounce to here and then drop. You see that? And then it's about to hit. It's about to hit the action point. And this is where I would just, yeah, you could take your profit or you can secure. Now David says to secure, which is okay, well, let's secure this stuff. Let's secure this crap. So closest ones, I'm gonna secure super close. And then the further ones up here, I'm gonna secure for breather. So these right here, I'm gonna secure really close to kind of maximize my profits. And then these up here are breather because it could build again a second position. Is right at 78. You see that? And look at where I'm at. This right here is another 1%. It's a 2% gain just by being in sales. And I honestly thought the market was up. So right there, I'm going to secure these tight. And this one, I'm going to secure right here. Again, a little bit breather. Being that it's now 100% and the possibility of 127. But it's probably going to bounce right here. So you know what? I'm going to just take it. Because usually 100% bounces. So I'm going to recycle builds or build a small buy right here. And even if it goes against me, I'm okay. But this time I think it's higher probability of bouncing. So I'm going to build a heavier position, not a 0.25, but a 0.5. So even if it goes against me, I'm okay. See, goes against me. So still continue. And see, I just add one. Haven't seen the turn yet. This looks like it because it's rounding. So boom, boom. This is it. So I'm gonna add one more right here. Why is my stop loss so tight? Oh. So I did get heavy. You see, I gave up a lot of my profits, but I'm getting heavier for the 127. And look, I'll come back and see I'll hit break even. And then all I need is a little bloop and bam. So the point is that even if you get heavy, like in this case, I saw an opportunity, a high prob, and so I got heavier. So I risked more, but you don't have to do that. Okay, because here, look, I risked all my profits. I went all the way to profits for how much? An extra 0.5. So it's not good trading. Okay, that's not good trading, but the point is that if I had TP'd it right at the tip top right here, that's a 1%. So the point is I risked here 0.5 to make 2.5. So overall, was that good trading? Probably. But you see here, I even though this was 100, I said this is possible bounce, went almost all the way to 127. But I only needed one move to make a profit. Is this making sense? Okay, so you simply have to know when and where. That's it. When and where. Because I simply looked at this big picture right here and took the opportunity. Okay. And again, I didn't know it was gonna drop. Again, don't didn't practice this foresight kind of thing. It's more of I just practice the market as it comes, and it's like, well, doesn't matter my technical analysis. What matters is position sizing. Know when and where, okay, to enter and possibly exit. And fib level just takes out a lot of the thinking, a lot of the doubts kind of thing, and just say, well, less hedging now. I don't really buy and sell at the same time, but more like, okay, I'm just going to build that position. Okay, I'm on the wrong move as far as the current move. I'm in the next move. But you got to be careful because this was a big drop, right? So it's like, well, if I entered right here, 62, into 78, into 100, into 127, and then you got to get heavy there. So the point is, you will make your money because you're light, and then you go heavy, and you will make the money right here. So even if this was a -1 drawdown, -2 drawdown, you will make your money like 0.5 or 1%, but you obligated to get out. You got to get out. The heavier you are, the more obligated you are to get out. And that's how you will be more consistent, okay, which is spread out your trades for the drawdown, minimize it, okay, and get heavy when and where right here to exit. Okay, so earlier today, like with UJ on a different count, what happened is I was in -2, came back, it touched 0.1, and then I was greedy. I was like, oh man, just a little bit more and I could get 0.2. And then this account, I exited my profits, but I didn't take my losers off. I didn't take my losers down here. And that was my mistake. And it went down another some 30 some pips, and then it reached -4. And I had to take it because I had to protect the account. It was a bad loss, but the point is you're not going to avoid loss. You're not going to avoid loss. You will have moments where you lose. What matters as a trader is you constantly win. Okay, so if you look at how trend works, trend does not move in a straight line. It moves up, down, up, down, up, down. So as a trader, you will have losses. You will have those losses, but minimize the loss. That's all a profitable trader does. The profitable traders wins, loses. So let's redraw this. See if I can whiteboard this. Don't seem to have my whiteboard. New share. All right. So as a profitable trader, right, you're not constantly like this. Let's change the color. You're not gonna be constantly up. Okay. If you're dreaming of that, then that's exactly what it is. You're dreaming. That's not gonna happen. Okay, so don't expect the impossible. Okay, instead, the most profitable trader is going to be win, maybe lose like this, win, lose, win, lose, win. Maybe you have your down days, lose, win, lose, win, lose, win. Does it make sense? The whole point is that the overall should be up. It doesn't matter that you have your drawdowns. Okay. The bad traders, as far as the losing traders, here's the difference. They win, but they lose. They lose more than they win. They win and they lose. That's the only difference. Even if you're the same, like 3% here, 3% up, it doesn't matter. The only difference is a loss. So if this is a minus 0.5 or a -2, or even a -4, what matters is this right here, that this was not -4, this is -4, +1 kind of thing. Okay, that's all that is the difference between a losing trader versus a winning trader, is the drawdown. It's not the profits. It's not the profits. It's the drawdown. It's a loss. So as long as you position size it and you take the win, then you will always have this kind of up curve. Okay, take the win. The heavier you are, you're obligated to take the win, even if it's a small win, even if it's break even, even if it's a small loss. That is a win. Okay, because if you lose 0.5, you can fix it in 2 sessions very easily. But if you lose -4, it's going to take you a week to fix it. Take the smaller loss. Does that make sense? Y'all are so afraid of loss that this happens. Okay, and that's what I'm saying. When my practice, I purposely am countering to get better at managing loss, because I do have the fear of loss. Why? I risked out so much. Okay, David talks about how I'm arrogant and like really confident and all that stuff. Some of that is masking this. It's not that I don't feel loss. And that was why I was cutting my profits short. It's because I was feeling lost. And it took me a while to realize that. And the moment I realized that, I was like, well, only way you're gonna break the fear is to do it, to face it. You're not gonna break the fear by running away from it. That only creates more fear. So if you're afraid of loss, practice loss. Practice drawdown. Practice it. So that's all I was doing. So instead of practicing my winners, I was saying, well, I think it's going to go up, then let me be in the wrong position on purpose. I'm going to sell. And guess what? You catch moments like this. It's like, whoa, what the hell? Okay. I actually caught the right wave. And then you have to build for it. Okay. And it's really, you don't know where the market's going to do. The market will do whatever it's going to do. You cannot forecast it. Whoever, am I sharing this? Or am I still sharing whiteboard? Let's do a new share. Like right here, I honestly thought this was going to go up. You don't know what the market's going to do. Okay. But it doesn't matter whatever position size or what direction you're in. The point is know where to enter the trades. So if I was buying here, like I said, I would fit these numbers and I would be adding here, 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 here. And I would naturally, these levels would actually get spread apart further and further. And that's fib. So it helps me for the price cycles. Okay. And these trades up here, you give back to the market, but you get super heavy down here, and you can fix it. And let's rewind this. Okay, I'm going to rewind this and be on the wrong side all this time. Like instead of sells and catching the right wave, let's buy it. Knowing that it's going to drop, right? Practice it. Clear this fib and only trade the hourly figure, which is right here at 60. Oops, it's too fast. Oops. Okay, so I exited my sales, right? And then I'm gonna buy now. So right here, I'm gonna buy, thinking, okay, I have not seen the term. Okay, this looks like it, and then it doesn't even come up, right? It doesn't even come up to 50%. And it drops. It's like, okay, whoops, I'm on the wrong direction, right? Okay, this, I think it's support right here. So what do? I add one more because I'm light. And then what's the next one? I'm going to add one more right here. Okay. Because it's an action point. So this one was one because it was the body. I added one trade right there, and then you'll not naturally see that my trades get spread apart more. So right now, this is what? 4. You'll see the next one is 8. This one's 12. But it's like, well, I haven't seen the turn. So let it run against me. I'm managing my drawdown. Does this make sense? So my drawdown, as long as it stays under 0.5%, or even in this case, worst case, 1%. Let's speed this up again. It comes to 78 right here. So I'm going to add 1. I'm going to add a 0.5 because it tends to bounce right here. I'm spreading this layer out right there. Boom, it touches. I'm adding a 0.5. So this is like 4 trades. Like if this is 1, this is 2 and 2. So it's 4. So I'm in 6 trades basically, right? And it keeps going against me. Well, look at this. I'm at 0.25 right now. Nothing to worry about. Okay, here, possible action point. I'm gonna add a light one because it's not at a fib level. It's like nothing in between. Does it make sense? Nothing in between. It could bounce here, so you take a small profit. But man, there's a big drop. There's a fast drop. So this right here, again, it's really not enough to profit from it. Nothing to recycle, right? And this is like news or something. So then, well, because it's failing, we'll just wait for the full 100%. Boom, right there. So that's 4 trades right there. So I'm gonna add two lots right there. That's 8 trades. Pull my stop loss below this pivot right here. I'm thinking, well, 100%, that's a typical bounce. And, you know, hey, look, I got the 2 pips, but not a lot. Don't like it kind of thing. So, well, right here, boom, like this thinks looks like it. So I'm going to recycle right here because high probability is going to keep going down. That's how Sean, his high probability is right here. He will sell right here for 2 pip scalps. Okay, well, that seems to keep going up. Well, no, it's not. So the point is I added a light one on the second attempt, but I at least got some profit. And right now I'm at 0.5. I'm minus 0.5, hovering around 0.5. See that right here? And the heavier I am, the quicker I want to get out. So this kind of looks like the turn. It's kind of flattening right here, like coming out to the trend, but it's not yet there. Now, if you do a faster trend, it's right at it. So this might be it. So I'm going to add heavy here for the turn. I added one, basically, so four. One lot was 4 trades. And crap, it doesn't look like it's paying out, right? So it's like, well, looks like maybe a double bottom. So it's like, let's just add light. So you got some right here, and it was too fast. Boom, they didn't get to take it. It went profitable, but then again, right now I don't have to hedge because I'm not even in my worst drawdown. Okay, so because this is failing, we're going to wait for the next action point, which is you float. And this is where actually I would hedge. I would actually be selling right here, but I'm not gonna do that tonight. And this is where y'all keep adding, and you keep adding to the risk. The turn hasn't shown up. If you play the fib, see that one, you could have gotten some pips there. And right here, some, but again, even if I float this down all the way right here, see that? I'm in -2 drawdown. So right here, I'm going to pause it. I am in a -2 drawdown. This is yeah, -2. It's not cut point, but the point is I'm surviving it. And now it's like, well, I need to add a little bit heavier, get out of my trades. So this is probably it because see how it's stalling in time? It came all the way this way and it's stalling in time. It's a time stall. This is a time stall. Does it make sense? So this is probably it. So now I'm going to start adding some one lots. Anytime it pulls down a little bit like this is now approaching 2.5. But this is your turn. It's 127 right here. Boom. So now this is 3. This is approaching 3. See that? It's almost 3%. That's 2.5 right now. And this is it. This looks like the apex. So I'm going to add some more. And this is where I'm heavy. I'm heavy. So I'm obligated to get out. Look how many lots I have. 1, 2, 3, 4, 5, 6, 7. More than 10 lots on a 50K account. This is like 20%. Okay, this is like super, super heavy right here. Which means if it goes against me, I'm obligated to get out and take the big loss, -4 kind of thing. But if it goes in my favor, I just profited. Does it make sense? I just profited. I saved, and this is exactly what happens. So here I add it, I'm heavy, and look, it's going up, it's going up, and then I'm obligated to get out. Boom, look at that. You see that? You see how this turned back right here? Yeah, it's a negative 3%, but look how much I made. 2%. I actually hit 2% of, so I could close right here and make 1%. And that's what matters, is you gotta know when and where to act. And this is where I don't think y'all are getting it. But if you play the fibs, if this is the fib, it's gonna come all the way to 100. So the point is, when it comes to 100, you exit. The 100 is right here. And this could be the last of it, but it should continue. And so you should see it'll come up and bam, right there. There's your 100. And you can exit right there at 2%, risking 3% to make 2%. Now, is that good trading? To have caught this kind of move right here and survived it, yes, that's good trade. Okay. So it doesn't matter if you're on the wrong move. It doesn't matter. What matters is position size. And you know when and where. When and where. That's it. That's all that matters. Okay, so hopefully this maybe open some aha moments for y'all. Okay, it definitely helped me by practicing being against the move, because in the past I would try to use my analysis to catch these moves, because I like to make money with the wave. But if I'm caught on the wrong wave, I know where to at now and how to size it, and how to survive the drawdown. Survive the drawdown. And if it didn't go my favorite, yeah, okay, I take the loss. But that's it. I have to take the loss and protect my account. Okay, and those are hard losses, but I can recover. Okay, and more consistently profit. Okay. All right. With that, have a good evening. We'll see you all in the morning, and take care.